Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Barry Sloane, CEO of Nasdaq-listed Newtek, to discuss services and financing for small and mid-sized businesses. Barry, it's great to see you. Welcome to Trade Talks.
Jill, thanks for having me.
You got it. And tell us a little bit about your history in forming the company in 1998 and what was its mission statement then and over the past 24 years.
Sure. So Newtek actually formed in the last century, January of 1998. And way back when, myself and the other founders recognized that there was a very large segment of the U.S. economy funded by independent business owners and having existed in that particular marketplace. And the company's mission statement was to provide financial and business solutions to this large swath of independent business owners that weren't currently being really well taken care of by the banking industry, the tech industry, or other industries relative to their business needs.
When and how did you go public?
So a little bit of an old school approach. We did a reverse merger, which I guess today's fancy definition of a SPAC. So the founders took its private interests in funds, reverse merged them into a public shell, got 90% of the outstanding shares, and we traded on the Amex in September of 2000. And obviously we joined Nasdaq, I think, in 2004. We're happy to have done that for sure.
Interesting. The very first stock exchange I ever visited was the Amex. So nice piece of history there. Tell us about your market experience from when you listed on Nasdaq in 2004 through the current date, including your decision to become a BDC in November of 2014 and your decision to acquire National Bank of New York City.
Sure. So I guess as we look at our history, which is 24 years in total, 22 years as a public company, we've certainly graduated from a nano cap, micro cap to, I guess you consider us a small cap today at around $500 million valuation. We've grown steadily and slowly. I'd like to say we're an overnight success. It just took 20 years to get here. And we've kind of built the company brick by brick. So, establishing ourselves on the NASDAQ in 2004 was very helpful. And then in 2014, the company finalized the decision to become a business development corporation. And that was valuable to us because we believed back at that time, the ability to raise debt and equity capital to fund our growth and business model would be better as a BDC and a 40 Act company. We have recently decided to reconvert back into a 33 Act company. The important aspect, same business, same model, same mission, same function, but because the markets change, we think it's important to prospectively change business forms. So great situation. We were one of the best performing BDCs from 2014 to current date, trading in a multiple of NAV, which most BDCs traded a discount to NAV. We traded as high as 2.5 to 1 to NAV. If you look at our earnings track record, it's been great, but now we think it's time to change back into a 33 Act company.
Yeah. And, I actually reviewed some of the materials on the investor relations page of newtek1.com and also took a look at the proxy statement. Why do you believe being a bank holding company and owning a bank is in Newtek's best interests?
Well, first of all, I appreciate that and bringing us back to why we're converting into a 33 Act company, because it's better for the public company to be a bank holding company than a BDC owning a bank. Putting that aside, we are not going to look like any other bank. And I think that's really important. When we compare ourselves to the top 4 banks that have 65% of the market of deposits or community banks, that's really the two comparisons. Our business clientele that the SBA defines as 30 million businesses, under 500 employees, 9 out of 10 businesses in the United States, they're getting services from banks where they give the bank the money, and if they're lucky, they get a loan. That's it. There's no other solutions. So I would suggest that for people listening to this podcast, go to our website, go to the IR section, look up our dashboard. The Newtek One dashboard will be a differentiator. We're going to wind up giving businesses the tool that's going to be helpful to their business, make them more successful. It'll give them analytics on their business, integration into accounting, and it's going to give them transactional capability that they can't get. They'll be able to make payroll from the dashboard, see web traffic statistics from the dashboard, store organizational documents on the dashboard, payment processing data. they're going to get the information that they currently get maybe from 5 different disparate vendors. These are things that already exist at Newtek. They've existed for 10 to 15 years. Now they're getting aggregated into one dashboard to deliver to a business owner.
Right. And Barry, to wrap up here, why do you think the dashboard that has been enabled is different than any other bank?
Well, first of all, we've been in these businesses for 10 to 15 years. So we've used the software both with our client for the client experience, and we've got staff that knows how to do it. So it's not like we're inventing, we're going to be in the payroll business. So we do all this. The other institutions do not perform these services for the customer. Most of them sweep this demographic into the retail end of the bank, and they don't give them institutional services that they give to Fortune 1000 companies. So we're treating this customer base as if they're Fortune 1000, they deserve it, they're an important part of the market, and frankly, if done correctly, they can be very profitable for us and our stakeholders.
Yeah. All right, Barry, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me.